Hello everyone, welcome to my channel Eco Mystery. Hope everyone is fine and safe. So in the today's class we will discuss about the depreciation, why there is a need to disclose the depreciation and how many methods we have to calculate the depreciation. So what is depreciation and why there is a need? So every time we know that whenever we procure any asset or using any asset in the business or real life also, so asset will not be able to provide same level of efficiency after a specific period of time, or the value will be decreased due to like might be some other alternatives are available in the market, or due to some upgradation in the technology. So it means the value of the asset will be decreased. So in the similar manner, in the similar fashion, the same thing happens in the business also. So in the business we have some sort of assets, like any asset a businessman can have, any plant and machinery, any computer, any laptop. So it means that whatever the asset they have, it doesn't mean that these assets will work on the same efficiency level, they are able to produce same level of output. So every time or every year the businessman has to record the depreciation in the books of accounts, so that they can reflect the true value of their assets in the books of accounts. Okay, so depreciation is nothing but it helps us to disclose the declining value of the asset in the books of accounts. So whatever the decline we observe in the assets, we have to record through the depreciation. So depreciation means decline in the value of the assets. So we have two methods of depreciation methods. One is straight lining method, second is declining method. Later on we will discuss in the depth what is straight lining and what is declining method. And also there is a one concept but of the salvage value. Salvage value is also known as the residual value. It is a selling price, or we can say that the expected value we can recover through the sale of the asset by the end of the useful life. It means by the end of the useful life of the asset, how much value we can recover, that is also known as the salvage value. And next concept is what cost of asset component. It means whenever we are procuring any asset, what are all the charges we have to capitalize in the asset cost. First one is purchase prices, second is transportation charges, any installation cost, or any setup fee. It means any direct expense that you have incurred for bringing the asset to the location, you have to capitalize it. Okay, let's discuss about the depreciation method. So we have two types of method. First is straight lining method and second is declining method, which is usually known as written down value method. So straight lining method, under the straight lining method we will I should say that expand the depreciation cost equally over the useful life. So it means in the financial statement every year we will record the equal amount of depreciation if we are following the straight lining method. Suppose if we purchase the asset of 10,000, and when we know that after the useful life we can recover the 2,000, like in the given example we know that after 5 years we are able to recover 2,000. So it means 8,000 is our cost, because 10,000 we have paid and we know that 2,000 we can recover. So net 8,000 is our cost, that ideally on which we have to calculate depreciation. So 8,000 divided by 5 year, 1,600 is the amount, it is a depreciation that we have to charge in the books of accounts every year. So it means in the straight lining method equal amount of the depreciation we have to disclose. But under the return on value method, we don't need to disclose the equal amount of the depreciation. In the return on value method, in the initial stage a higher amount will be charged as the depreciation and it will be reduced in the later stage. And for example, cost 10,000 and depreciation rate is 20%. So it means in the first year the depreciation we need to charge 2,000, and then next year we have to charge on the 8,000. Okay, here is a typo here. So in the first year we have to charge on 10,000, next year we have to charge on 10,000 minus depreciation of the first year, which will be 8,000. Okay, let's try some more examples. Before examples, what will be the journal entry for the depreciation? So whenever you have a accumulated depreciation account in the books, so the journal entry will be depreciation account debit to accumulated depreciation, and the next entry is P&L account debit to depreciation, because first impact should goes to the asset and second one goes to the P&L account. because depreciation is an expense, so we have to debit the P&L account and credit the depreciation account. But if we are not maintaining the accumulated depreciation account, in that case depreciation should directly affect to the asset account. So depreciation account debit to asset account credit, and P&L account to depreciation account credit. And sometime it might be possible that in the books of accounts we will maintain the accumulated depreciation account. So whenever we are maintaining the accumulated depreciation account, so the depreciation charge will not affect the asset account directly, it will impact the accumulated depreciation. Okay, so let's try some examples. Asset laptop, and here we have to follow the straight lining value method. Cost is 60,000 and we know that useful life is 3 years, and residual value is 6,000. It means 54,000, on 54,000 we have to charge depreciation, and for the 3 years, so 18,000 per year we have to charge. Okay, diminishing value method. Asset is machinery which cost around 2 lakhs and depreciation rate is 20% per annum. It means in the first year we have to charge the depreciation on 2 lakhs, which is 40,000, and on the next year we have to charge the depreciation on 1 lakh 60,000. Okay, case study first. ABC Private Limited purchased office furniture on 1st April 2023 costing 2,40,000. It means they have purchased furniture which cost around 2,40,000. Useful life was 8 years and the residual value is 16,000. Okay, so what they need, you are required to calculate the annual depreciation, value of the asset and journal entry. So here they have not given us which depreciation method we have to follow, so let's do through the SLM method. So 2,40,000 minus 60,000, because this is a net cost that we have paid, right? So 2,24,000, on this value we have to charge the depreciation divided by useful life. So 28,000 we have to charge per year. So this is the annual depreciation. And on the second part, what they need, the value of the asset after 3 years. So 28,000 we have to charge every year. So we can multiply by 3 years. Through this we can calculate how much total depreciation we can charge in 3 years, and we can reduce through the cost. Okay, and what will be the journal entry for depreciation? Depreciation account debit to furniture and P&L account debit to depreciation. Okay, let's do another case study. XYZ Limited purchased a machine on 1st October for 5 lakh. It means in the middle of the year they have purchased a machinery for 5 lakhs, and useful life is 10 years and residual value is 20,000. It means on 4 lakh 80,000 they have to charge the depreciation for the 10 years. It means 48,000 per year. But for the first year, since they have purchased the asset in the middle, so they have to charge for the 6 months, because from the in October they have purchased. So how many months? From 1st October till March, 6 months. So for the half of the year they have to charge the depreciation, so only 24,000. For the second year it will be like for the entire year, so it will be 48,000. And they are asking for the book value after 2 years. It means 5 lakhs minus 24,000 first year depreciation minus 48,000 for the second year. So the rest will be the book value. Here they want us to calculate the depreciation by WDV. They have bought a furniture machine for 3 lakhs, and but they want to calculate as depreciation for the 3 years. It means we have to calculate the depreciation one year, second year and third year. 3 lakh into 25%, it means 75,000. So in the and at the end of the first year, the closing value of the machine will be 2,25,000. 3 lakh minus 75,000. On the second year we have to calculate the depreciation on 2,25,000. Okay, and third year on a similar basis we have to calculate the depreciation on the closing value of the second year. So through this WDV will work. So as I said, every time in the WDB at the initial stage the depreciation charge will be higher and it will be reduced on a later stage. On 1st April, Sigma Limited purchased a plant and machinery by incurring the following cost. Purchase price is 5 lakh, installation charge is 40,000, transportation charge is 15,000 and trial expense 20,000. So all these costs we have to capitalize it, because it is all the direct expenses that we have incurred. It means how we have incurred 60 and 70, total 75,000 direct expense. So 5,75,000 we have to capitalize it, and they ask us to follow the straight lining method and depreciation of 20% on the original cost. Okay, so and they also told us that a useful life of 5 years and no residual value. So 5,75,000 divided by 5, it will be a depreciation 11 1,15,000 per year. Okay, and they asked us to prepare the machinery account. So in the machinery account, in the debit side, all this expenditure will become, because whenever we incur these expenses, what journal entry we will pass, like whenever we are purchasing the machinery, what journal entry we have passed, machinery account debit to cash, and similar for the charges like installation charges, transportation charges to cash. Okay, so all these charges should come into the machinery account of the debit side. Okay, and they also asked us to prepare the depreciation accumulated depreciation account. So accumulated depreciation account also always have a debit balance, because whenever you have a depreciation, it means it will reduce the machine asset value. So asset is a credit debit balance. So for reducing the asset balance, we have preparing a depreciation accumulated depreciation account. So accumulated depreciation account will be a credit balance. So whenever and journal entry for this depreciation account debit to accumulated depreciation. So 1,15,000 we have to charge to the credit side. Okay, hope everyone is able to understand the concept. Please try more and more examples of the depreciation. Only after that you will be able to enhance your understanding about the depreciation. In the next class we will discuss about those cases where we have incurred the sale. So in that case, how we can calculate the depreciation.